Welcome. In this video, ZBCN coin rally has started. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully observe the chart, it is clear that the price movements are displaying a very healthy and stable upward trend. Especially in recent times, the price structure aligns perfectly with a rising curve formation. Such rising curves are extremely positive structures in technical analysis, as they show that the market is gradually building upward momentum and that buyers are stepping in more strongly. This curve provides important clues from both short and medium-term perspectives, clearly showing that the price continues to move upward in a certain orderly pattern. Rising curves typically emerge during periods when prices increase not through sharp and sudden jumps, but through steady, controlled, and fundamentally sound movements. Touches to this curve can be interpreted as signs of the market's confidence in the uptrend. Each time the price attempts to decline, it holds onto this curve and then continues upward with new momentum. This clearly demonstrates growing confidence in the market and a positive shift in investor psychology. The rising curve seen on the chart can be evaluated not only as a support line, but also as a structure that represents the rhythm, balance, and internal momentum of the market. The fact that the price moves forward by touching this curve indicates a very healthy trend development from a technical standpoint. These touches signal the presence of a widely accepted support level among investors. Such formations allow the price to continue upward without overheating and increase the sustainability of the uptrend. The price respecting this curve also confirms the validity of the trend. If the price were constantly deviating from and moving erratically away from this curve, it could raise doubts about the strength of the uptrend. However, in the current situation, the price is moving along this curve in a regular fashion, clearly indicating that the market is rising in a controlled manner and that this rise is based on solid technical foundations. This is a very positive sign that helps investors maintain their positions with more confidence. Price structures that touch rising curves also represent a classic indicator of the rest and continue strategy. While moving along the curve, the price may experience minor pullbacks from time to time. However, these pullbacks should be viewed merely as pauses in the trend. Each touch point is where buyers re-enter, support the market, and sustain upward momentum. This is extremely valuable as it shows that the uptrend is not temporary, but rather long-lasting and sustainable. Additionally, these kinds of curves are very useful for identifying strategic buying zones for investors. Each touch to the curve represents a potential bounce opportunity. Investors who engage in technical analysis often use this curve as a dynamic support line and prefer to open positions near it. Especially when these touches are supported by volume, the likelihood of the price gaining momentum again becomes much stronger. The fact that the market is rising in this kind of curved structure shows that the movement is more organic and flexible, rather than one that can be modeled with straight lines. This tells us that the market is progressing in a balanced manner, both technically and psychologically. Curved structures help investors understand not only the direction of the trend, but also its speed and strength. In the current outlook, the price structure moving in line with this curve indicates that the trend has not lost momentum and is preparing to continue its upward movement steadily. But we cannot make a decision based solely on the curve, so let's take a look at the other metrics as well. Stay tuned. When we carefully examine the chart and conduct a Fibonacci retracement analysis on the downward wave from the peak to the bottom, we observe a significant technical reaction, particularly around the 0,382 level. This area is one of the classic Fibonacci retracement levels and is considered a critical decision point in technical analysis for both buyers and sellers. In the current scenario, the price encountered notable resistance upon its first touch of the 0,382 level and temporarily stalled at this point. However, this does not necessarily mean that the market has fully rejected this level. On the contrary, such pauses upon the first touch are quite common and even considered a healthy market reaction. Typically, when the price reaches such important technical levels for the first time, there can naturally be some profit-taking or hesitation. This often causes the price to pull back slightly from that level. However, such pullbacks can create an opportunity for investors to re-enter positions. In fact, a brief downward test of this level could be a chance for the market to regain strength. Technically, the second attempts at such key resistance zones tend to be more effective and successful. The weakness observed during the first touch may be replaced by a stronger breakout during the second attempt, supported by increased momentum and volume. These kinds of Fibonacci levels, especially the 0,382 shallow retracement, often serve as significant reference points for the resumption of an upward movement after short-term corrections. The price touching this level and pulling back the first time actually means that the market is testing and assessing the strength of that area. If the price approaches this level again later, buyers may step in more organized and with greater force, influenced by the impressions left from the previous interaction. As a result, this technical resistance zone could be broken more easily with a strong and decisive wave of buying. Additionally, the 0,382 level is considered a shallow correction level by many investors. If the price consolidates or fluctuates around this level for a while, it often creates new buying opportunities. Especially if an increase in volume is observed, the likelihood of this level being broken rises even further. If the buying volume during the second test of this level is higher than the first, this is considered a very positive signal in technical analysis and significantly increases the chances of an upward breakout. One of the frequently observed scenarios in technical analysis is that price breaks through a critical resistance level more easily and strongly on the second or third attempt. This is because the market has seen the order density at that level during the first test, tested psychological barriers, and started planning its next moves accordingly. In other words, the failure of the first attempt may actually serve as preparation for success on the second. In the current chart, the potential for a stronger upward breakout during the price's second approach to the 0,382 Fibonacci level is quite high. If this scenario plays out and the price successfully breaks through the 0,382 level on the second attempt, it can instill significant confidence among investors. This breakout not only represents a technical resistance being overcome, but also strengthens the likelihood of trend continuation. Especially following such resistance breakouts, the price may advance rapidly and strongly toward the next Fibonacci levels, such as 0,5 or 0,618. This can form the foundation not only for a short-term upward move, but also for a medium-term bullish outlook. Such price behavior also shows how controlled and deliberate the market movement is. In particular, the price reactions around Fibonacci levels reveal how much market participants trust technical analysis data and the importance they assign to these levels. Careful examination of the chart shows that the price recently retraced down to the level of the 200-day exponential moving average, EMA, one of the long-term moving averages, and reacted strongly to the upside after touching this important technical support point. This is not just a short-term price bounce. It is also a very strong technical signal that the overall market structure continues to move forward on a positive and constructive footing. This is because the 200 EMA is considered one of the most reliable indicators used in technical analysis to determine the direction of the trend, and as long as it remains above this average, it is assumed that the upward trend continues. This last touch of the price to the 200 EMA is a healthy correction. This is because it is quite natural for the price to approach or touch such major averages from time to time in prolonged uptrends. This both stabilizes the market from overbought territory and creates new buying opportunities, allowing the uptrend to continue in a healthier and more sustainable manner. With the 200 EMA working as a strong support, this scenario also shows that the buyers in the market are still active and in control. On such pullbacks, traders do not consider the price drop to the 200 EMA level as a threat, but rather as a great opportunity. The 200 EMA shows us the long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.